So Tesla is worth more than $1 trillion, and it's one of the 10 most valuable companies in the world. That's despite making less cars or money than Toyota, General Motors, or Volkswagen. But that's not stopping a lot of people from investing in it. Which begs the question, does that mean it's overvalued? Well, not necessarily. Hi, I'm Kylie and welcome to the channel where I break down the tough financial stuff that impacts us all. This is not financial advice. I am a finance journalist. I do own some Tesla, but I'm going to try and keep this as unbiased as possible. So currently Tesla is valued at around $1 trillion by market capitalization, becoming the world's most valuable car maker as of June 2020, with its share price hitting a high of over $1,000 in 2021, and that's after the stock split. But here's the thing, it's not actually making a lot of money. In fact, although it sits at the top of rankings by valuation/market cap alongside giants like Apple and Microsoft, it's not even in the top 100 when it comes to making a profit. And this is the reason a lot of analysts and, your neighbor Joe think Tesla is overvalued. So one of the most common methods of determining whether a stock's price is expensive is to look at its price to earnings ratio. Basically, it's the price you're paying for each stock in line with how much money the company is making. And a company's earnings are important because this is what it needs in order to keep growing and creating new products. Tesla's PE ratio sits at about 250 times, meaning its price is 250 times its earnings. To put it into perspective, the average PE ratio for the automotive industry is just 20 times. Okay, so by traditional metrics, Tesla is overvalued. And a part of the argument is that Tesla should not be a trillion-dollar company because that would mean it's worth more than other car makers that make more cars and more money than Tesla. For example, Toyota's PE ratio is just 10 times and Volkswagen is just 5 times. And meanwhile, both of these car makers are among the world's most profitable companies. Makes you think, so what is going on here? But the thing is, people don't always invest in companies because of the current performance. Instead, they're investing in the future of the company, which, makes a lot of sense. Today, Tesla only sells around 500,000 cars annually, which is less than 1% of the global auto market. But comparing Tesla to other traditional car makers might not really be a fair comparison. First, and most importantly, as I'm sure you already know, Tesla isn't just manufacturing regular cars. It's making electric vehicles. And it's dominating the market. Today, EVs make up just about 7% of the automotive market. But by 2030, that's predicted to be somewhere between 30 to 50%, depending on who you ask. Meaning if Tesla can remain the market leader in electric vehicles over the next decade, it would also dominate the entire car industry, ahead of, say, Toyota, whose path towards EVs is a lot less clear. Tesla's growth rate also outpaces other car makers. Toyota could be selling 1,000 times more cars than Tesla today, but that might not matter in a few years. Today, Tesla sells about 60% of EVs worldwide, but as other car makers join the race, that share is expected to drop over time. So when it comes to the car industry, the big question really should be whether Tesla will continue to dominate electric vehicles. Which is not an easy question to answer. But here's another thing, Tesla is more than just an EV maker. And this is where it kind of gets confusing. Even if Tesla isn't dominating the EV market, there are other growth areas of the company that some people are a lot more bullish about. Tesla is also a tech leader in AI, robotics, solar, energy storage, and space exploration. And some of these technologies are revolutionary, like self-driving cars, which, if successful, could unlock value on a scale that has possibly never been seen before. Or Tesla's battery revolution. Elon Musk has often said Tesla's energy storage business will eventually become even bigger than their EV segment. Tesla's Powerwall and power grids are industry leading, and if the company can make batteries more efficient and cheaper, this would essentially solve the future of renewable energy. So in actual fact, a lot of investors aren't all too focused on Tesla EVs at all. Instead, they see Tesla as a portfolio of technological bets. If a few of them pay off, then this could drive huge growth. But even those advancements aren't necessarily enough. In energy storage, Tesla is just the most well-known company. There are hundreds of other companies building technologies in the space, all competing to make energy storage more efficient, like Toshiba, NextEra, and General Electric. And so the CEO, Elon Musk, is himself a big part of the reason people invest in Tesla. Many people see Elon Musk as something of a loose cannon, as likely to knock a considerable chunk off his own company's share price by his erratic behavior and outlandish statements as to drive it up. In recent years, he has smoked pot on a popular podcast, got himself embroiled in various Twitter fights, and perhaps, strangest of all, admitted that Tesla's stock was too high, instantly wiping around $13 billion off the company's market cap. All of that said, as founder of PayPal, Tesla and SpaceX, and one of the richest people in the world, he's clearly doing something right. And his involvement has arguably added a large amount to the valuation, and he's pitching a strong narrative about the future. He's got strong investment in other companies, and he's a great marketer. He's also very smart and arguably one of the greatest businessmen of all time. So a lot of investors are betting on Musk rather than just Tesla. So what do the analysts say? Well, technical analysis charts suggest that Tesla is not a buy at this stage, although the long-term trend is a different story. And analysts have always been pretty torn on Tesla's future valuation, but these days, the bulls do tend to outweigh the bears. Cathie Wood's Zark Invest is famously bullish on Tesla, predicting its price to hit $7K by 2024. Let's check out this clip from Cathie Wood.
3,000 is our base case, not our bull case, but our base case. So our minimum hurdle rate of return expectation for a stock is 15% at an annualized rate over 5 years. So a doubling over 5 years. Tesla is about nearly a quadrupling over 5 years, so right. Well within our range. So, you know, we have been taking profits, and that's because Tesla in here, I think it's becoming very obvious now that electric vehicles are taking massive share from traditional gas-powered vehicles. And so the stock finally is responding to that reality, because that has been true.
And here's what Ron Barron had to say.
What did you see in Tesla early on, and what do you see in SpaceX now?
In Tesla early on, I thought the opportunity was to convert the cars that we make in the United States and the world from gasoline to electric. And that hadn't been accomplished ever before, and I was betting on Elon Musk. We invested $380 million in between 2014 and 2016, after thinking that we shouldn't invest in it, and was 1.5% of our assets at the time. And we made $4 billion in profit in it so far, and I think we're going to make another triple, maybe 4 times over the next 10 years.
Wedbush analyst Daniel Ives expects a price target of $1,400 by 2022. Goldman Sachs analyst Mark Delaney is another bull. He's predicting $1,125, and Morgan Stanley has a similar view. UBS has a neutral rating and a 12-month price target of $1,000. On the bear side, Stuart Pearson of BNP Paribas recently reiterated his sell recommendation on Tesla, suggesting a 23% downside risk. And Barclays' Brian Johnson is among the most bearish. He predicts a fall of around 72%, citing risks like rising commodity and energy costs, as well as production delays. And who knows, maybe he's onto something. Between November and December 2021, Elon Musk himself sold almost $7 billion in Tesla stocks. So you can see why it's so hard to value Tesla. On the one hand, by traditional measures, Tesla is incredibly overpriced. If you look at its PE ratio, its profit margin, its output, its earnings, the numbers suggest that investors are definitely paying way too much for Tesla stock. On the other hand, those traditional metrics might not even matter in the case of Tesla. Even respected Wall Street analysts from top-tier investment firms think it could be a buy, and in fact predict that it is a buy. Whether that's because of market sentiment, the fame of Elon Musk, or because fundamentals suggest Tesla will be the leading car maker / battery developer / space explorer in 10 years' time. So that's the video for today. Do I think Tesla is a buy? Well, I did buy it, but should you? I don't know, I'm not gonna advise you. I'm not an advisor. So there you have it. Is Tesla overvalued? Yes, and also no. It depends who you ask, which is frustrating, but that's the real answer. I hope you enjoyed this video. I'd love to hear from you. Have you bought Tesla? Do you think it's a buy? Why or why not? And if you like this video, please hit the subscribe button, the like button, and yeah, leave some comments and I'll try to respond. Thanks again, guys. Bye.